Over the last 7 years of me trading the financial markets, I have talked to hundreds of traders who have completed their funding evaluation and got the funded account. You know what's the most common thing in all of them? They developed a playbook, a trading strategy that works at least 60% of the time, and every single trade that they take, they make sure that they are following their trading strategy. And to become a profitable trader, and most importantly, to become a profitable funded trader, you have to have one strategy that works at least 60% of the time, and that strategy gives you minimum of 1:2 rewards from every single trade that you take. So in this video today, I'm going to give you my ultimate perform trading strategy that I use every single day to find the trade opportunities in the market with the minimum of 1:2 rewards. But just before we do that, if you are new to the channel, consider hitting the subscribe button and turn on the notification bell. And this video is sponsored by the Forex Funder, one of the very few firms that are offering you funding capital up to $1 million. More about them later on in this video. So I have currently opened up GBP USD chart on the 1 hour time frame. What I do every single day, I start my analysis on the 1 hour time frame, then I go down to 15-minute time frame. When I want to take the trades for a long period of time, then I start my analysis from the daily time frame. But most of the times I'm just taking the trades on the 15-minute time frame and I am starting my analysis from the 1 hour time frame. And every time on the 1 hour time frame, the first thing that I like to do is I try to find the break of market structure. What do I mean by that is market, it simply just does not go up or does not go down. It always moves in a pattern. It creates a high, pulls back, then tries to go and break that high. Sometimes it fails, sometimes it breaks. Whenever market is breaking that previous high, which is also acting as a resistance because it resisted the market to go down, whenever we break it, that's considered break of market structure. And I do this analysis on the 1 hour time frame. Right after the break of market structure, I use two confluences to confirm that this movement that happened from the buyers, should I be interested in waiting for the pullback after this movement or not. So what I do, I add two indicators. One is called volume indicator. The second is simple moving average, which I'm going to show you how I use both of the indicators. Now, after when I get the confirmations that yes, this movement that happened from the buyers is a very good movement and there is a potential that we may get a pullback, and when we will get a pullback, then we can take the trade whenever pullback will end, when we will have enough confirmations. So I go down to 15-minute time frame, and on the 15-minute time frame, I wait for the market to come back down, and it comes back in this pattern, like creating a miniature level of lower low and lower high sequence. And I wait for it to come to this level from where we recently broke the market structure and went up. When it comes here, I wait for the rejection, and whenever there is a rejection, I simply just take the trade. After I get couple of rejections, and I also use simple moving average for my second confirmation. Now let's deep dive into one example so you can have an understanding that how I actually look for the trade opportunity. And I'm going to show you one of the trade that I did on my funded account very recently, and I made pretty much over 2 rewards from that trade. So on this chart of GBP USD 1 hour, we have this movement that happened. Now looking at left, we have this strong resistance level or a previous higher high. After this movement, look at what happened in the market. Sellers, they came down aggressively. However, after some time, buyers took control and they went up with such a strong movement that they ended up breaking this previous higher high. So we have our break of market structure. Now, right after that, we have started to stop right here. We can definitely see this movement is showing that there may be a pullback. So I told you that I make sure to confirm through volume indicator and simple moving average, and I confirm whether this strong movement that happened from the buyers, should I be interested in waiting for a pullback or not. So to confirm that, I simply go to indicators, type volume here and choose this volume option, then type moving average and choose this option of moving average simple. And now I'm going to give you the settings. Double click on the volume indicator. What you need to do, you need to choose the same color for growing and falling. It makes it look much better and more understandable. Take volume MA, change the opacity, and also choose area from here. Now, the volume indicator is going to look something like this. Now, whenever the bars in the volume indicator, if they are very strong, very high, then the moving average in the volume indicator, it means that there was a lot of volume involved in the market. So this movement, when it happened from the buyers which broke the previous resistance, if we just look at the volume right here, look at how crazy the wires went up, and they were definitely higher than moving average line. So that means there was enough volume involved. That's my first confirmation. For the second confirmation, as we have added simple moving average, I like to use the length 20, which is gonna be something like this. And whenever we break previous market structure and market starts to stay above this 20 SMA, which means that's my second confirmation. Now it's gonna stay above 20 SMA in case of buyers, and it's gonna stay below 20 moving average in case of sellers. So I have both of my confirmations. Volume indicate that there was enough volume in the movement of the buyers, and also moving average gave me confirmation that yes, this movement is something that I should be very interested in. Now let's go down to 15-minute time frame, and on the 15-minute time frame, market structure looks something like this. I'm gonna put a line at this resistance right here, which market broke when it was creating this buyers movement. And I'm gonna wait until we get a pullback towards this line, towards the break of market structure. And most importantly, whenever the sellers are gonna come, I want them to come like this pattern. I want them to basically make a movement with a miniature level of lower low and lower high sequence. And at the same time, they need to go lower than the 20 moving average. When they will go lower than 20 moving average, at this line of resistance that we previously broke, and after the rejection, buyers start to show some strength, and at that time we go higher than 20 moving average, then I look for my trade opportunity. Now let's wait for the pullback, let's wait for the market to go lower than 20 MA, then wait for rejection, and then lastly wait for it to go higher than 20 MA. And look at how we are going down. Definitely right after we reached at this area, there was a strong movement that happened from the buyers, which is the first indication that we may get a rejection right here. So let's see if we get a rejection. Definitely sellers came down, and I think they're gonna take out the positions right here, if I'm not mistaken. Yeah. So basically, whoever is now selling here, we can have an idea that first movement that happened from here, but sellers that definitely came down, but it does not mean that we are not in the overall buyer's market. After these rejections that are happening right now, I told you I need some strength from the buyers, and that's the strength that I can see from the buyers, and market also went higher than 20 MA. There is one thing that I want to talk, which is about market structure. When the pullback was happening, it was creating lower low and lower high sequence. So for us to make sure that we are back again in the buyer's trend, it has to be like that. We need to break the lower high from here, and after that there needs to be some sort of a higher low, because that's gonna be higher high, that's gonna be higher low, that's gonna be higher high again. So right after we will be coming to make a higher low after this change of corrector, then and only then I will be interested in taking the buy, no matter how many rejections I have. So right here we had this rejection, which we can see. Buyers, they went up, they broke this level of lower high, because previously we were making lower low, lower high, lower low, lower high, tried to make a lower low, could not make, and now we have made a higher high. So right after we came here, that's definitely our higher low. So let's just wait from the market to go a little higher than 20 MA, then we will take the buy. We will place our stops below this rejection, and our target is going to be at this level from where the pullback started to happen. So anywhere you place your trade right here, when market started to go higher than 20 MA, and put your stops lower than 20 moving average and your target at higher high, it's going to be a good trade opportunity. And this trade gave me around 2 rewards if I remember it correctly. So let's see how this trade will play out. Right now it's coming down, which is fine. Now look here, the reason why I said place your stops lower than the previous rejections, because sometimes it can happen that market will just come down to take out the liquidity before it goes up. So you have to make sure that when you take the trade, you give your stop loss a little bit of space, just to make sure that it does not get stopped out. Now overall, so far we are having a good movement, and we are near to our take profit, and we just hit our take profit. That was the exact entry right after when I started to see that yes, buyers are now going higher. We are above 20 MA. We already have turned from lower low, lower high sequence into higher high, higher low sequence. So that's when I took the trade and I targeted the previous high. So that's how simple your strategy should be, and there needs to be some sort of confirmations before you enter into your trade, and there needs to be an exit strategy in place. I knew exactly how much money I'm willing to lose because I had my stop loss in place and also my target in place. So let me know what you think about this strategy in the comment section. That's one of the strategy that I teach to my masterclass students, and I literally gave it for free so you can learn how I trade. So that's it from this video, guys. Thank you so much for watching until the end. I will see you in the next video. Bye for now.